Welcome, everybody, to the Pacific Northwest Farmers Cooperative podcast, market podcast for June 11th. I'm Trudi Allenbaugh, Shane Rebold, Lane Hannes joining us today. We're going to talk a little bit about the WASDE report and do a little basis update for white wheat, talk about some canola and a little bit of harvest outlook. But first of all, just a quick disclaimer to remind you that the views and opinions of this program are of the hosts and are for informational purposes only, and there's substantial risk in trading futures and options, which you should be carefully consider prior to trading. So, all right, let's get right into it. WASDE report today really was everybody, analysts, everybody looking at it going, there's probably not going to be a whole lot in this one. Really more eyeballs are going to be on the June 30th planting and production report.
Quarterly stocks.
Quarterly stocks. Thank you. And, so we'll kind of see everybody really looking that not a lot of change for this report. However, there was a couple of things I think worth talking about. Just a quick rundown notes that I took was, you got 25-26 crop and then projections into 26-27. So U.S. wheat ending stocks I'm going to call old stocks, were unchanged at 935. And, but, significant reduction for ending stocks in 26 crop year of 744. We keep seeing that number go down. As far as, where those mostly everything of that production is hard red winter.
Driven by a reduction in yields going down.
Yeah, so if you looked at each week on the crop conditions, we've certainly seen some, low numbers in the good to excellent category. So not really that much of a...
just 26% good to excellent this year on the hard red winter wheat crop versus 52% last year.
Right. So I had a little note here too that to come up with that yield, it was 46.8 bushels per acre, and just for reference, last year was 54.9. So
national average on winter wheat.
Yeah, thank you. So to be expected that number would be lower. Then, just going into global changes for wheat, really just a few slight adjustments, a little bit higher. So that really wasn't, anything to talk about. Everything that was talked about in all the other reviews and reports that I looked at was the 26-27 corn. No, 25-26 corn production. They increased corn production by 14 million tons. So,
pretty significant.
Yeah. So, and everything was about, I was like, you knew Argentina was going to be higher. You predicted that Brazil would be higher, but there was 9 million tons increase out of India. And I think that's what everybody was talking about. Where did that come from? So everybody was like, wow. And that seems like a pretty big increase.
So the corn market sold off, I think, 8 cents today. Wheat markets were down just 1 or 2. Yeah. Kansas City might have been higher in the front months. But back to world wheat and that USDA report. Australia was kind of interesting to me. So in May, it was 30 million metric tons that USDA projected they'd have for the next crop year, 26-27. And today they reduced that by 2 million metric tons to 28. But a couple of weeks ago, we saw Australia's Ag administration print a number that was like 26.7 million metric tons. So the USDA didn't match that projection. Maybe they will continue to decrease that as we move into the future, but they didn't do it today.
Yeah, so and I think last year too, they were always lagging a little bit from that number too. So it'd be interesting to see where that.
Yeah. Australia, of course, dealing with the upcoming weather pattern that's supposed to be more El Nino, going to get dry down there and lower their yields.
Right.
Plus, we know that they're going to have fewer acres of wheat. They should be done planting their wheat now. So.
Right. And wouldn't they come out with their planted acreage at the end of the month as well? Or is there...
That's going to be Canada, actually.
Okay, that's right.
So that has a bunch of significance for canola.
Yeah, for sure. So a couple other things just to note on the WASDE was, some movement in the wheat buy classes, and there was 2 million bushels of imported white wheat that was supposed to be in the May report that they did a correction on. So that kind of moved that around a little bit. Ending stocks for white wheat at 91 million. And, otherwise it was just shuffling of the deck chairs on that. So we won't get into, they did do some changes in white wheat for their estimates of planted winter white wheat. But really the biggest change on that was in that hard white wheat.
Okay.
Almost half as much as production as the previous year. So we'll see once get spring wheat's planted acreage report done, see what those kind of estimates look like. So then we'll start doing a little more reporting on the wheat by class and how that changes. So, all right. So I think anything else on Wazoo that
I don't think so. It was mostly a nothing burger. It didn't really have a whole lot of weight on the market other than what happened in corn, but I think there was some other underlying things today that made corn move the way it did, mostly to do with Iran. So we can get into that a little bit later. Had weekly export sales this morning. Anything of note?
Yeah, I looked at that. White wheat had a really, really good week. So in the classes, they're doing actual, and then they're pulling the 25 crop.
Rolling over last year's that didn't make it.
Yeah, so
May,
just going to talk about the actuals. Wheat was on the higher end of the expectations at 666,000 metric tons. White wheat and spring wheat were the two classes that were at the highest amounts. White wheat had 6.9 million bushels, and hard red spring had 5.4 million bushels. So that was significant. So white wheat had a good weekly sales. Otherwise, and corn, I guess one other thing, corn continues to just be on the high end of estimates, and they had almost 2 million, I think, on the combined new crop and old crop. So, just continue to see that huge export of the corn number. So
look at where, corn prices are now on the board. Chicago, July is like 4.11 at the close today.
Yep.
So as far as world feed grains go, corn's the number one. Definitely.
Get it out of here.
Yeah.
So that was a busy day on reporting, and we had market meetings. So hopefully some of you were able to join Lane and Shane this morning in Genesee, and this afternoon in Pullman, and tomorrow will be
Rockford for breakfast
and
Oakdale for lunch.
Awesome. So, okay, so let's go into some of the stuff that you talked about in the marketing meetings today on some white wheat and basis and some history on that. Why don't you
definitely
give us a little overview on that?
Yeah. So most everybody knows we had a great time setting hedge to arrive contracts earlier this spring when the wheat board moved up after U.S. started attacking in Iran. We did a bunch of HTAs, so now what do we got to do? We got to set basis, make those into cash contracts. Over the past couple of months, we've seen a negative basis on white wheat. Futures have been really high. Cash wheat has been pretty sticky, not moving foot or step for step with the futures board. So finally, we saw basis turn around here in the last couple of weeks. The board's down $1. Basis has appreciated to around 25-30 cents. I think at the close today, white wheat delivered in August is 30 cents over the September contract. And we believe, because of the size of the crop that we have coming, 30 to 40 cents is going to be a really good place to set your basis on those September contracts. You've still got, 60 some days for things to change. But again, given the size of the crop, it should keep cash values fairly low. I think futures are starting to balance out here now that they've depreciated about $1. So that keeps our basis levels relatively lower to where they've been here in the past couple of years. Maybe 50 or 60 cents is what you could have had, or better. $1 in some years, but it just doesn't feel like that's in the cards unless the futures board really takes a dive. And if that happens, cash is going to come down a little bit too. Basis could improve. It doesn't seem like it's going to happen right now.
And it seems to me just kind of where, like you said, we've given all that, but basically everything on the rally from the Iran war has come back, and we're down at those levels again. And given what we've talked about with corn, to me, I don't see corn needing to be that any cheaper. I think that's kind of where you're talking about a little bit, that we'll see that level. You know, wheat doesn't need to be that much cheaper either, unless we have, and looking at some of those production, next year's ending stocks and production and exports. So yeah, I mean, I think we have found kind of a trading place. So when you look at demand and white wheat and basis, where we're used to these higher levels the last few years, you got to look at where this basis does to your futures level. And if it's above cash, the contract has done what it's meant to do. So I think you got to take a look, especially in this early next, say 20, 30 days before you really start hitting some harvest pressure.
Right.
Cash,
I'm just winging it here, but this time last year, we were probably somewhere in the low to mid $5 range for September futures.
Yep.
And our cash prices were about $6.
Yep.
So that lent to higher basis levels. Right now, we're just a little above $6 cash, 6.25, but futures are going to stay, I think, around $6 or high 550 or above.
Yep.
It just seems because, again, we're having lower production of wheat. We don't have the crop we had last year. That should bring futures and keep futures higher. Yeah.
And you've seen that, we've talked about that too, the premium between Kansas City for the red wheat with that much lower hard red winter production. I think you're going to kind of continue to see that. But that too, that spread only is going to carry so far. Yeah. So it'll keep Chicago, somewhere in line with that as well.
Yes.
So,
yeah.
So our goals are going to be 30-cent or better basis in the next 30 days.
I think that's solid advice.
Yeah. Okay. All right. Let's go to canola.
Yes.
We've seen a lot of strength in canola.
We have.
Too.
Yeah. And we've seen, we topped out here about a week and a half ago on the futures side of things. November contract went as high as 808. That's Canadian per metric ton. We've had a recent little bit of a pullback, but we've kind of got some underlining strength here in these high 790 range. So, what's going on, what to expect. We've got the June 30th Stats Canada report coming down the pipe. It's going to show us the current or most current planting data, which is what everybody's been talking about. Alberta's been having a lot of rain events. They've been delayed. It's kind of same story Lynn talked about Montana having issues with DNS plantings. I think just north of there, they've fought the same systems up there. So we will kind of see, Alberta's not a lead dog on canola production for Canada. It's Saskatchewan. And just before we stepped in here, some initial, just province only canola and mustard planting rate percentage estimated right now was kind of like 93, all the way back to 2023 and to 25. They were at 100% by this time. So there's been a little bit of degradation. We'll see if it's been enough to, shave off a good chunk of acres. We, from the May report that came out, acres were already up from last year, and last year was a record production. So, maybe we see 500,000 to 1 million acres. I think that would really help canola. If we can get that chunk or bigger shaved off, we got a chance. If it's only a couple 100,000 acres, I think it's kind of a baked in already into the system. We'll eat it.
Even if the acres didn't get planted because of the delays, the crop's going to be behind.
Yes.
That's going to weigh on it too.
That should keep basis stronger for the near term, right?
Yep, absolutely. So basis is kind of a funny thing. It should help that elevate that or grow it. I think it kind of is at a spot where it can go nowhere but up. We're at a zero basis right now for August, September, $5, push on further. So we will see. The big thing that's been helping out, secondly, on the canola markets is as long as we don't like to say it with the Middle East conflict, but with oils being up, soybean oil's been up, canola oil's up, a huge part. And I think this is growing more so on me that with the 45Z program, they limited all stocks to have to come from North America. That's Canada, U.S., or Mexico.
Okay.
Canola oil or canola seed is 40% oil, where soybeans are only 20%. And the reason that that's important is that fluctuates the rate, the mathematical rate that they use because of carbon intensity, more carbon credit per se out of that crop than versus soybeans. So you get a better rating on the fuel producer side, which then allows them to get a higher tax rate. Okay. So it kind of all falls in line with canola kind of being a lead dog. There's
so
crush
if you're
points.
a fuel blender, you're better off using canola oil than soybean oil.
Exactly. Yeah, because you can get this higher, what's the name for it?
Tax credit.
Rebate
the
or whatever it is.
that you can put in this whole complex system. Don't ask me how it works.
We'll do that on the next podcast.
Exactly. I've been saying for 2 months and I still don't understand it. But yes, it's definitely a lead dog because it has a higher carbon rating. Yeah. So, that's why we see crushers running at capacity full out. CHS rolled out some PowerPoints for us, quick data stuff. And just on the soybean side, soybean crush margin currently off of the board, we're using soybeans, oil value, meal value. The $3.70 is the margin per bushel. the 10-year average has been $1.33. So just to show how much money, the expanded margin that they're getting out of these oils is strong, creating strong demand. Ideally, translating in to push through our
They
planting
want to
date.
keep the plants running.
We want it running at capacity, load everything, and keep her full. So hopefully that, my current gut feeling is that we're going to have the strength. We're going to push through the plantings. I'd like to see 22 again for new crop.
So
we've
part
had
of
a little
that
bit of
too, when we've talked a lot about the with what's going on in the Middle East and the Strait of Hormuz and all of that, and it having a longer each time that it extends, it's going to have a longer tail on what gets planted. We talked about that with Australia, wheat versus canola or some other planting, and then kind of the same thing there. The longer this goes on, you're going to see that continued strength in this oil market and this crush market. So, and that's going to have a longer tail to, even let's say the strait gets opened up and we have peace in the Middle East. It's going to take some, it's not like a magic wand. It's going to take some time for that to happen. So we should see some strength for a while here.
At least a few months.
Yeah.
And as far as grain markets go, concerned with, the Strait of Hormuz and what's going on in Iran, it looks like we've pretty much shrugged it off now. When this all started at the end of February, the 1st of March, oil was trading at $68 a barrel. It peaked somewhere above $110 a barrel. Right now it's $90 a barrel. And grains are right back to where they started. So oil's still elevated. Grains are back down here where we started the whole thing. So wheat and corn shrugged it off.
Yeah, it seems like now when we were really trading headlines, now headlines come out and it's a quick, maybe on an overnight trade, and then by the morning you kind of, it's old news, and maybe there's too many tweets and cry wolf about it's a deal's made and it's not made, and we've continued to see that. So it's
threats with no follow through.
So I think I don't think that's going to be over anytime soon. And like I said, you are seeing the market kind of disengage from that a little bit more.
Definitely.
And, kind of rolls into a little bit of outlook and where we go from here. Crop looks really good out here in the PNW. Just drove to the Tri-Cities yesterday and back this morning, and they look really good. Winter wheat looks really good. So you got to look at that a little bit. The sales are lacking, or they're behind a little bit, or it seems like the pace is slower. We still got lots of time for your end user, but end users are certainly still in the hand to mouth. There's no, the ample supplies is still being felt. Now we're looking at some of these lower production years, and maybe that starts to build as we get into this crop
in the
year.
year.
But right now, when you talk about, simple supply and demand, bushels are coming. We need some more swing demand. Absence of China. We've been talking about that. Haven't seen anything happen. I still think that China will buy some white wheat, but harvest pressure's coming.
Yeah,
So
certainly wouldn't be surprising.
yeah. So
Will it be tons and tons and tons? Probably not.
Probably
but
not.
A little would help.
Yeah. So, I think my outlook too is, like I say, you're going to see some harvest pressure, maybe a little bit more than what we've seen over the last couple of years, just from that, without some incremental demand or some of that swing demand business to hit some white wheat. But otherwise, we're still going to have some strength in trade that, what's happened in the Middle East and the Strait of Hormuz, and however that affects, all the supply chain. So, but definitely harvest pressure, I think, is coming. So
Yeah.
Absolutely.
above 6 might look pretty good right now. Do we go below 6? Maybe. I don't know.
Yeah. Could be in the cards.
Yeah.
For sure.
Absolutely.
So canola outlook too. I think
Yeah,
stay
some strength.
through
Yeah, I'd like to
August
see a
and-
22, throw on another layer there. I wouldn't sell the whole farm, I still think that there's a little bit more carry through. Are we going to go to 25? Probably. I don't think so. I don't think there's that much demand just yet. There's going to be plenty of stocks. There's still a little carryover from last year. So
Right, have to have something of a production issue to or
really
less
get
planted
us,
acres,
to get us $3.
So.
Yeah, absolutely. And on the wheat side, I would agree, but there's still good opportunities. The basis is coming back.
Right.
There's some short-term flex opportunities that we've looked at. So we're not out of the woodwork yet.
I think there's going to be some opportunity for some good prices, but we need some demand to get behind it first. For sure,
absolutely.
All right, thank you so much for joining us today.